Welcome to the ARMR Report today, guys. Your host, Brett Rosenthal, as always. This is a live trading desk. You're getting a live look in. It's the ARMR Report, Algorithmic Risk Management Research. This is quantamental investing. We take the combination of quantitative execution algorithms, combine it with a fundamental foundation, and that's the information edge I share with you every day. Thanks for being here. We're going to make this brief today. I've got a lot going on the trading desk. Excuse me. So we spent over almost an hour on Saturday getting caught up. So I hope you guys enjoyed that. If you missed it, you can go ahead and watch it. Don't forget you can subscribe to this channel right down here, and you can subscribe to the ARMRReport.com, ARMR Report.com. All the information I'm going to share with you today, I use to manage my own personal assets and assets of investors I work with through our Interactive Brokers relationship or our ARMRReport.com subscription. So here we go. Today there's two topics I want to touch real briefly, and then I'm going to have to split. Number one, we're going to go over gold and silver again. I want to just clarify something. I had some discussions with some subscribers from Saturday's live stream that I want to clear up. And obviously they're up big today, so we added precious metals bullion positions to our portfolio last week. All ARMR Report subscribers, I call them insiders, ARMR insiders, are aware of that. I sent you out email telling you what was going on, and you can always log on to ARMRReport.com and check to see what stocks we own there. And I included, as I always do, the price we paid for the stock, the date, and what our stop losses are. Okay, so there's three different places where we'd stop out positions, and I give you the prices for all of those. You have to determine how to execute. Right? I don't know you guys. I'm not telling you what to do. Right? Let's go over that again on YouTube. There's so many of you. I don't know. I couldn't possibly give you personal advice. Okay? So I'm just sharing my knowledge with you, what I do in my portfolio. The second thing I'm going to talk about is a major announcement from the Fed last night or this morning or whatever. And I'm going to highlight for you, there's three reasons we're going to start buying stocks again in our portfolios. One of those reasons is being addressed by the Fed. And I'm going to go over that. So let's start. If I have time, I'll get to some questions if you guys want to throw out some questions on the board here. I'll take a look and we'll read through them later. Okay. Excuse me. All right, step one. Told you all last week we were loading up on bullion again. Okay? When we look around us, we look around the world that's going on here. Economic implosion, massive stimulus packages, not billions, but trillions. And there's only one asset that makes sense to us coming out of this right now that will be a major beneficiary of that. And it's precious metals. We're going to get to the point again where people realize the real value of gold and silver bullion. So what we talked about, we have our favorite ways of doing that are the Sprott Funds, okay? SPROTT funds. Now look, this is what I do with my money. I do it for clients I work with. You don't have to do it. I got a lot of pushback on this. You like GLD and you like SLV, go for it. I don't have any problem with that. So let me just explain this one more time. Sprott Funds own gold and silver bars outside of the financial system. The bars are held in a vault. They're numbered. Every share of those funds that you buy gives you the right to get delivery of gold and silver bars in the future. Not immediately. I had a subscriber, I think correctly mentioned to me that you have to hold the shares for a period of time before you get that. Okay, that's true. I think it was a year in the prospectus, right? If you hold it, if you can prove you've held it, then you can get delivery, okay? Guys, I don't want delivery of the bars. That's not really why I'm buying the stock, so that I can get the bars delivered. That's not the point. So it's not a question of me holding this for a year so I can get delivery. And I think that's where there's confusion. This is a piece of paper just like GLD is a piece of paper, okay? I believe this piece of paper is going to carry a premium when we get into a precious metals bull market because of the ability to get delivery. I think it's going to carry a premium. This is just my opinion. I feel more confident owning the assets because the gold bars are outside, the silver bars are outside of the regular banking system. So it makes me feel more comfortable, not because I want the bars, but because that piece of paper I'm buying, I think will carry a premium. How do I know this? Because I've seen it carry premiums before. Okay? I've been here before. Not necessarily this exact asset, but assets like this. We made a lot of money in 2008 for our clients. We protected capital everywhere. The only reason why we made money is because we own gold and silver and eventually the mining stocks. So when I say we made a lot of money compared to what the market was doing, right? Market was down 55%. We made money. So I know what I'm talking about when it comes to precious metals. I just don't spend all day going over this with you guys and digging into all of the facts of why gold is in the midst of the beginning of a massive bull market. Okay, I believe it, but I don't spend a lot of time talking to you guys about it. So to wrap up this thought here, yes, you can trade GLD, SLV. I don't have any problem with that. Okay? If we go into one, a real financial implosion, I think there's more safety in the Sprott Funds. Okay? Worst case scenario, I might hold them for a year and want delivery. I don't know. Okay, but that's not why I own them. Two, when you get into a bull market, these types of funds, I think, will start to show a premium. In fact, we already have a premium in Sprott Physical Silver. It was at a discount just a couple weeks ago, which means it's outperforming, right, just SLV because it's trading at a premium now to what's in there. I wouldn't run out and buy it. It just popped to a premium. But my point is, we're not even in the bull market yet for precious metals, and I think we're going to see a premium. So that's why I'm there. I think I'm not in there to day trade or trade week to week. I'm trying to position the assets and hold them longer term. I don't need to get delivery, but I think the ability for delivery and the fact that the assets, the bars, are held outside the banking system could make this asset go to a premium to its net asset value. That's why I'm there. Okay? Moving on. And in conjunction with this gold and precious metals story, we bought them last week. Gold's up 3.3% right now. Silver's up 3.2%. Markets are down again 3 and 4%. So, right, we're making money across the board. The Fed announced unprecedented action today. And that's why I wanted to come on here and tell you guys this so you understand what's happened. They said two things in all of their discussions. They said two things that mean a lot to me, and I want to share it with you. Number one, unlimited resources to keep buying all of these assets. Hang on a second. It's a live trading desk. Just give me a second. Oh. Okay. It's a unprecedented action. All of the mortgage-backed securities, all the stuff that they're doing, they took away the term $1 trillion or $2 trillion or $1.5 trillion, and they said unlimited until we get this under control. Okay? Unlimited amount, trillions and trillions and trillions of dollars are going to be spent with no limit. And you wonder why gold is up 3% today. Because where do those trillions of dollars come from? They just print the paper. And if the Fed's doing that, you know that's happening all over the world. Okay? The second thing they said was, we are going to be buying corporate bonds. The Fed's buying corporate bonds. And the corporate bond ETFs. That's LQD. Now, those of you following me know that there's 3 reasons we're going to get back in the market. 1, ARMR algorithms change the risk monitor from red to green, from risk off to risk on, right? For those of you who are new, very briefly, the ARMR Risk Monitor is driven by 7 proprietary algorithms of the top 7 indexes we use to determine risk. Those 7 algorithms told us to go to 100% cash February 24th, which was the first day of the market crash. So when those algorithms tell us it's time to put capital back to work, we're going to listen. That's number 1. Number 2, I've told you the bond market will lead equities. It did that in 2008. The bond market players are more attuned to the failures of companies. It's all these guys do. So they've been buying crazy amounts of insurance in the CDX market, which they did in 2008. And they've been dumping corporate bonds like crazy. So the LQD is the way for us to watch that corporate bond market. It's the investment grade corporate ETF. And the Fed just said they're going to start buying that ETF. That ETF is up 4.5% right now. It was up 11% pre-market. It's been selling off all day. I'll get to that in a minute. But this is a major shot across the bow. This is like a major step by the Fed. They said an unlimited amount of resources are going to be buying corporate debt. So that's the second thing on our list. If we can see the bond market bottom, we'll start to get more interested in stocks. So we have to see if this announcement holds and the bond market starts to build a base. If it does, we get more interested in equities. And of course, the third thing is a treatment or a cure. If there's an announcement that there's a treatment that really works,
90 seconds.
Then we'll see, we'll get more bullish on the market. Okay, so those are the 3 things. Right now, we don't have any of those 3 things, right? So the market keeps going lower. But the bond market's up 4.3% right now. Now, it's been selling off all day, and so equities are cratering again. I tell you about my successes all the time. So let's share failures. I want to be honest with you guys. Okay? I'm going to give you all my knowledge. I want you to learn from success and failure. So I came in today. You know I like to day trade. I've been having a huge run day trading, making a lot of money. All right? Lost money today. Didn't work. I came in today looking long because I see the bond market up big. So when the market was down in the morning, put positions on. They rallied a little bit, rolled over, and cratered again. Now, normally I go long and short. Today I didn't short, so I lost money on the long side, and I didn't short because I keep looking at the bond market saying, how can equities crater with the bond market up? How can equities crater? Like, in order for me to get short, I make money when the market craters, right? So I'm not looking for little wiggles, and I figured, okay, maybe we'll be in a trading range today. I'm not gonna short today. What a big mistake. I'd be up on the day had I been shorting, right? So I don't always get it right. Sometimes you guys ask me that. Does this always work? It doesn't always work, right? Today's a perfect example of that. But that's day trading. Longer term, we have to watch LQD now. Is that announcement from the Fed going to bottom the corporate bond market? If it does, it doesn't happen within seconds. Equity doesn't immediately respond. But what we really want to see is corporate bonds bottom and start to appreciate while equities depreciating, and you get that positive divergence, and then we start looking for entry points. Okay? So, to wrap up, this doesn't mean we run out and do things right away, but it's a major announcement, and we have to watch LQD closer than we ever have before. Because if the Fed says they're going to be buying corporate bonds and they're going to be buying the ETF, which they've never done, and it goes down anyway, we're in big trouble. We'll be in big trouble, guys. Okay? If it goes down anyway, we're going to be in big trouble. I'm not going to bet on that. I'm not going to bet on it going down anyway. You have the biggest guy at the table saying he has an unlimited line to go all in. It would be crazy to bet against it, in my personal opinion. So I don't have a lot of interest in being short there. And I'd like to look long, but it cost me today. All right, so that's it. That's all I wanted to tell you guys today. Any questions you've got, let's go over it real quick, and then I got to split. Brendan, thank you so much for that shout out. You guys can subscribe right down below there. I set up a subscription for you, armorreport.com. Click on it, take a look. Thomas Stanley built long-term positions last week in precious metals, I assume you're talking about, and I think that's a great idea. I see a quick bounce back. Again, maybe just down. All right, you're asking me about casinos, airlines, Live Nation, and Canopy as it hit the bottom. All right, I want to take Canopy Growth out of that, okay, because I think Canopy Growth is definitely probably somewhere around the bottom. When you're looking at the market capitalization of a stock being equal to or less than the cash on the balance sheet, you know you're at close to a bottom, if not the bottom. This is a wonderful business that is almost being valued at its cash value. I think the market cap's $4 billion right now, and the cash is $3.8 billion. So in other words, the market thinks their business is worth nothing. Obviously, that's not right. So that's high up on my whiteboard of a stock I want to own when I start buying stocks again. All the other stuff I have no interest in. Casinos, airlines, Live Nation. This is just me. Feel free to do it. I'm not saying you can't make money on a snapback rally. It could certainly happen. But I've been asked this question a lot. I'm building a list of stocks that have been crushed because their businesses are being destroyed by coronavirus, and which ones I want to buy first when the window opens. And I still lean towards things where, as an example, I always give out, I lean towards Disney as my name that I like. Okay, it's like the casinos. It's like, airlines. I mean, it's a destination place that shut its doors and they can't make any money. But they have Disney Plus, right? They have a movie studio. They have other things that they're doing. Disney Plus must be going through the roof. People are stuck at home with their kids. Everybody must be subscribing. Does it mean a lot of revenue right now? No, but coming out of this, that's going to be a major tailwind. So I'm looking for businesses that are performing, where I think it's overdone. I'm not sure it's overdone in airlines. I don't know. If we don't fly for a couple of months, who knows? That's just my opinion, though, right? I don't want to stop you from doing something. I'm not saying you can't make money off of a trade there. You certainly can. You certainly can. Thoughts on Zoom? Blake, I blew it, man. I missed it. And let me tell you, I looked at it hard. I looked at it and I said, should I put this in the ARMR portfolio? Should I be buying this personally? Obviously, the answer was yes. The market was imploding. And to me, it's like I don't know. I guess at the end of the day, I thought to myself, it's like a gimmick stock. I mean, what if this whole thing is over in 3 weeks and everyone goes back to school and back to their job? And this talk about how this is changing perceptions and everyone's going to start working from home when this is over, and that's going to benefit their business. I just don't buy that story. But it's certainly caught in a parabolic move now, right? Everyone wants to own it. So sorry about that. I missed it. I looked at it and I just thought, I can't do this, Fast food restaurants. Yeah, I mean, some of them, some of the fast food restaurants I like, they're still delivering, right? I mean, was it McDonald's or something? Some guys are delivering. Fast food restaurants have a setup where they can actually still do business versus sit-down restaurants, Hey, let me call you right back, okay? All right. Thoughts on utilities? They have been hit harder than I thought. Should be considered essential services. Yeah, I totally agree with you on that. I'm looking at utilities. XLU is the ETF there. Oh my goodness. It's been destroyed, and yet people are using electricity more than ever. Excuse me. Let's take a look at XLU. Holy smokes. What is going on there? What is going on in utilities? What are we missing? Business Ness. What are we missing, man? Because that looks like a no-brainer to me. And yet there's no way I would touch it right now. What's the yield on this thing? Let's take a look. What concerns me is that maybe I'm missing something. Because that thing's imploding and it doesn't make a bit of sense. Let me just go take a look. What's in there? XLU, 4.6% yield. I mean, in the world we live in today, that's money good. So, my favorite is to go to things like Duke, Dominion, Southern Company. So I don't necessarily buy Xcel. I look at XLU to decide on utilities, but then I go to my favorite utilities with the higher yield that I think is real. Should be good. Not sure why it's getting killed. All right, if you bought Coke at 40 and Gilead at 65, should you be a seller here? Yeah, I'm worried about Gilead, I've reduced positions across the board. I made it a normal position size now. We own it at 63 to 65 range. We booked a huge amount of profits on options. Remember, we told you about this last week. And now we've just put on a normal position size next to Teva. So we own Teva and we own Gilead. I'd like to add to my Gilead back in the low 60s if it gets there. See, the problem is it was the poster child stock, and now we see there's many different therapeutics coming, and we don't know who's going to be right, who's going to win first. We should have good results from Gilead in the next couple of weeks. We don't know that. And the stock has just given up all of its gains because the market's imploded. I can't tell you how to sell your stocks, though. I don't know you really. I don't know what your portfolio looks like. So you have to use stops. You have to raise your stops. You have to figure out, where am I going to book a gain? And God knows you can't allow a gain to turn into a loss. Okay? That's a major mistake. So you might have given it a big cushion. You're letting it get volatile. It's running. But when it gets back to a certain price, you have to say, okay, I'm booking a profit on this. Guess what? The whole market's crashing. And I made money on a stock. Great. You see what I'm saying? Don't be greedy if it's not working. I know it does. It feels like we're missing something in utilities. How can they be going down like that? So I think what we have to do is pick and choose the right utility. I guess part of the problem maybe is people aren't going to pay their utility bill. Maybe the utilities will, along with all the other businesses out there, give people credits and say, you don't have to pay your bill for a couple months. We're not going to turn the lights off. And so the yield that we think we're going to get on a dividend might not be there. Now, I think that's crazy talk. So it's a great index for us to watch. And when we think the market's bottomed, let's say this whole thing passes in 3 weeks instead of 3 months, then utilities will be a no-brainer. I think that's what's going on. All right. AMRX and OPGN for color. AMRX. Let's take a look. I don't have any opinion on that one. I'll tell you when I know something. If there's something I don't know, I have no interest on those. I don't know those names, so I'll have to do some work for you. And Brandon, I'm pretty sure you're a subscriber, right? You're an insider, so feel free to call me and we could talk one-on-one offline about that. Hasbro, up big today on news of parents buying more games and toys. Guys, I'm not trading stocks today on the long side. The market's imploding. right? So I'm just looking for the indexes on the long side for a day trade. But until we get one of those three things occurring, right? Risk on from the ARMR Risk Monitor. Okay, the bond market actually stabilizes and goes up, and we get a treatment. I'm not interested in buying stocks. So I'm building my whiteboard and my list, but I'm not out there trading. So, Brandon, I don't have anything I'm shopping today. You know, I'm not day trading right now. Anything other than indexes. Okay. All right, guys, that's about it. I got to wrap it up. I will talk to you again on Wednesday, and we'll see where we're at. All right, take care of yourselves. Be safe out there, both physically and in the market. All right, take care, guys.